Okay, so let's talk about what I believe is one of the most important concepts when it comes into trading, and that is the daily bias. Now, the reason why I believe that the daily bias is one of the most important concepts when it comes into trading is because this is seriously going to help you to become a profitable trader. If you don't know the daily bias, then you are going to get absolutely smashed by the market. Why? Because the daily bias is the same thing as when you are swimming in a river. You either swim upstream, which means against the current, or you swim downstream, which means with the current. Because again, I'm not going to explain how a river works, but this is what a lot of traders normally do. So let's imagine that this is a river. No, let's do like this. That this is a river, and this is you, right? This is you. You are chilling. Well, you're not chilling because your life is in danger, right? This is you. Let's do like that. This is you, and you are like this because you don't know if your life is in danger. And there is a log right here that you can grab yourself to and save yourself. And don't forget that the stream is going this way because we're going downstream. But as you were passing by, you saw that there is a rock right here. And so what a lot of traders do is that they actually believe that the best way to profit is to swim upstream against the current to grab onto the rock, get completely messed up with the current, when they would be so much better off if they just let themselves drift and come towards the log, and that's where they would save themselves. But a lot of traders are most of the time when trading against the daily bias, they're basically trying to grab onto this rock that they believe is going to get hit. Because one of the things that you will notice in the market is, let's say that we are bearish. What I'm going to tell you is that first we are going to go into a bearish PD array, which is going to be, for example, a fair value gap right here. And then we are going to start moving to the downside. And a lot of traders, what they do is they first try to call the low, which is already like, if I see that you are a reversal trader or anyone is a reversal trader, I already know that they're very likely not a profitable trader. And second of all is, you're basically saying, I know the market is going to go up here and then it's going to go down. Well, why? There is going to be likely on a lower time frame reasons for the market to continue moving bearish. And so if the daily bias is bearish, instead of trying to enter in the longs and in the shorts, just wait for the market to give you the short and then you enter. That's what this example is for. Is because a lot of traders, this is what a long would be, and this is what the short would be, which means you can just let yourself drift, not take too much of your mental, and then just grab here, and then you survive. While here you need to basically be way more advanced of a trader to know how to trade counter to the trend. Right? You need to be an advanced swimmer to be able to swim against a river's current and then actually grab yourself onto this rock. Which means if you want to become a profitable trader, try to grab this instead of this. And that is what the daily bias is. But so many traders just absolutely love to overcomplicate the daily bias. And I seriously don't get it. And every time that I see people overcomplicating the daily bias with, oh, it's this, then you have to do this, and then you have to do that, I already know that they're obviously trying to sell you something, and they're obviously trying to make you think things are more complicated than they actually are. When in reality, the way you have the daily bias and the way you understand the trend of the market is by asking yourself two questions, which is, where are we and what are we targeting next? Now, what do I mean by that? Well, where are we? This is basically you locating yourself in the market at this specific time. You go onto the daily chart and you ask yourself, what is the trend? What is the structure of the market? And then you ask yourself, okay, if that is the case, if X, Y, and Z is the case, then what is the target? So what is the magnet that is attracting price? So where are we? Let's see. We'll see a lot of examples here. So we'll see this in action. Where are we right now? Where are we? Right here, if you see this picture, I just took this today. If you see this picture, well, this was actually a hindsight one. So this is a Kiwi US dollar. A lot of traders at this time, they're already trying to long the market. And every time they see something like this, they're like, yes, I was right. Oh my God, I am the best. When they don't understand that, once again, let's go up, they are trying to go towards this rock. When in reality, who would be better off here? Well, the traders that understand that in reality, this is still heavily bearish, because you can see that the market structure actually switched all the way from up here. And if you go back, you'll see that this is a sweep of a high. So the market starts to break lower. And from here on out, it's just constantly in this bearish trend, bearish. All of the time, you would be so much better off shorting the market. So at this particular time, where are we? Well, we just had this market shift. So now we have this bearish PT array, which is a bearish order block. And then what are we targeting next? We are targeting this swing low. So this is the big magnet in price, right? It's obvious that the daily bias right here is bearish, but a lot of traders are here trying to long. And if you want proof of that, you actually just go onto the sentiment on my FX book. If you go onto community and sentiment, so let's do this on Kiwi US dollar, so NZD USD. So let's do NZD USD. Okay, so if we go onto NZD USD, notice how, let's zoom this in, notice how 9% of traders are short while 91% of traders are long. This is the price action on Kiwi dollar. What do you mean only 9% are short? Can you understand why people misunderstand the daily bias? So this is the thing. Right here, you can obviously see that the market is bearish. We had the market shift, we have a bearish PD array. So now what are we expecting? What are we targeting? We're targeting this low. So what you expect now is for the market to go into a bearish PD array first, and then down towards the swing low. And this is where the power of 3 is going to be important. This is where the power of 3 tells you where we are going first, and then, but daily bias just answers where are we going to go after. And that's where we have these lows. And then if you notice, let's do, what are we targeting next? So once again, we have the swing low. This is the big magnet in price. We have a bearish PD array that we expect to be tapped before we start breaking bearish. And then what is the result? Well, the result is that the market beautifully came towards the bearish PD array and then absolutely tanked towards the swing low. But a lot of traders are long. Can you understand why so many people fail? It's because they try to overcomplicate these concepts of no, and then this is going to happen, this is going to happen. Actually, this is the low on Kiwi dollar, and that's why it's going to go up. No, it is not. No, it is not. Daily bias is as simple as asking yourself, what is the direction that is slapping me in the fucking face? And the answer right here is bearish. Right? The answer is bearish. After this, I don't know. Maybe the market continues breaking lower. My daily bias is going to continue bearish. That does not mean I have to execute every single day, and we'll talk about that very, very soon. But you need to understand that the daily bias very, very usually slaps you in the face. And if it's not slapping you in the face, then you should probably not be trading this market. So let's see Well, but then a lot of people say, oh, but this one was obvious. You should be trading markets that are obvious. You should not be trading markets that are choppy. Where do you lose most amount of your money? It's in choppy conditions. So why would you trade? Why would you not trade? Oh, this one was obvious. If it's obvious, why did you not take it? If it's obvious, why did you not take it? Maybe ask yourself that. Right? So this is what you have to understand. The reason why traders fail is because they think that obvious trades are not good. When in reality, most of my winning trades come from obvious trades. Trades that me and the people inside of the Simple Trading Edge all take. So with that being said, let's go into the charts and then I will show you a daily bias exercise that you can do in order to improve your daily bias in general. So first, let's go into the charts. We'll see we'll actually see a good amount of examples. So let's see some random pair. Let's do random Forex pair generator. Is there something like that? Oh my God. Okay, we'll do the first one of this. Okay, so for example, let's check, instead of Kiwi dollar, let's check euro dollar, where recently euro dollar has been very, very bearish. And you can see that from the moment that we sweep this high and we start to break bearish, and when does that happen? It happens when we have this candle closure right here. So this candle closure is what indicates that the market is bearish. And believe me, I was bullish from all the way, from as soon as this candle printed, I was bullish. And then as soon as this candle printed, I started to become bearish on euro dollar. And so you can see that afterwards, so after this specific candle and after this market shift, after we actually close, how much more money would you have made if you were just shorted towards where? Towards this low. And then where? Towards this low. And then where? Towards this low. And then where? Towards these equal lows. And then where? This low. So notice how all of this would have been profitable days if you just trade in line with the daily bias. Right? So then what happens? If the market starts showing this bullish shift, you start thinking, okay, maybe there is a point to be made that the market is actually going to start moving bullish now. And I thought that actually, but this was actually during presidential elections. So after we sweep this low and we start forming this bullish order flow, I started to actually think, okay, maybe with the presidency coming up, we'll just shoot to the upside and then I'll be bullish and then I'll target these highs again. But then when presidency came, boom, we absolutely crushed to the downside, have a little bit of a retracement, and afterwards we just move lower and lower and lower and lower. So notice how this I did not trade because it was presidential election week. And then afterwards, I just kept on shorting. So I avoided trading when the market was not going in the direction that I so desired. And I traded aggressively when the market did move in my direction. Why do you think that last year I made almost 100% returns? It was because I was not trying to trade these small fluctuations in the market. Oh, no, actually, because this day was bearish, this next day is going to be bullish, so I'm trying to take this long. No, I just wait for the market to present exactly what I'm looking for, and then I execute. I'm the type of guy, I would much rather go for the long, continue shorting on a market that just shows you the shorts instead of trying to go for this tiny rock up here. You will have less trades and you will have more reward and you will have a higher strike rate. You will see your trading will completely change if you just stop trading against the trend. And so what I would tell you to do, so I think this explains a lot, but we can do one more. Let's do Aussie dollar, and let's do a bullish one. So right here. So no. Okay. A lot of you are probably now asking yourself, okay, but when do I switch bullish? In what example do I switch bullish? And in this case, for example, this was going to be the target, and then we do reach the target, and this was big news. Let me see. Well, this was NFP, big news. And now you might say, okay, now I'm bullish. Well, not yet, soldier. You wait. Oh my God, that is not what I wanted to do. So I'm bullish right now. No, you still wait for what? You wait for this market shift bullish to actually give you the confirmation that the market is bullish. So as the market moves to the upside, now you start to switch bullish. And so you now wait for the market to come into a bullish PD array, and then you enter in longs. Boom. And what is the overall magnet in the market? It's going to be this high right here. This is the next magnet in the market. But before that, you're obviously not going to be holding a trade for I don't know how fucking long. You're basically going to be looking, okay, what about tomorrow? What are we targeting tomorrow? And you see that there's a fair value gap right here. And then there's going to be, and the fair value gap has 3 levels, beginning, middle, and end. Then you have this extreme, then you have this extreme, and then you have the swing high. So as the market is moving higher, now you wait for the market to switch bullish. Boom. Okay. Now this is the time where you execute on the longs. So you have the tap of the bullish PD array and then the movement to the upside. Now move to the upside, next target reach. So this would be winning day. And as the market moves to the upside, winning day. As the market moves to the upside, now fair value gap. We're at the fair value gap, and boom, we move to the upside, right? So can you see, it was not hard. You waited for the market shift, but the problem is, let me explain to you what the problem is. The problem is that traders see this 200 pip reversal, 230 pip reversal, and they think, oh, well, now I can't execute anymore because the market is already too bullish. When in reality, you can always execute more and more and more. And let me tell you, one of the things that saved me recently when I was trading, and it was this range where I did not know if the market was actually going to be turning bullish or bearish, because we just had this big sweep of the low, had big tap of order blocks right there. And so I thought, well, maybe there is the point that the market is going to be moving to the upside now. But what I actually did was I set this inside of the simple trading edge was, okay, you know what? Yes, we have a big low and big order blocks that were just reached. We call this low just absolutely beautifully. I'm telling you, we called this low so nicely. But then I saw this reversal right here and I was like, okay, I don't know what is going to happen now. So I'm not going to be executing. And then when the market is clear again, that's when I want to execute. And so what I did was, okay, I'm bearish. I don't know. I'm bullish towards this high. I don't know. I'm bearish. And then I target this low. That is exactly what I did, because most of the time inside of this range, I said, I don't know. And what I also said inside of the community, and I said this on the Telegram, was I'm waiting for the market to give me this was a 200 or 300 pip reversal. Yeah, I wanted to see the market moving up 300 pips before I would even think about longing. Right? Because for the market to be bullish, when you notice that the trend is so bearish, I don't want to just see a tiny reversal. I want to see confirmation. Because the same people that say, oh no, the market is now gone, are the same people that see this reverse 130 pips and don't understand that there's an extra 400 pips to take advantage of. So I don't wait, I don't try to call this high, because I don't want to take advantage of the whole move. I want to take advantage of the easy part of the move. Right? I want to take advantage of the easy part of the move. That's the only thing I focus on. I don't care about the other stuff. And so now let's talk about one of the things that I call the daily bias exercise. This is actually very good. One of my favorite exercises to do. And so let's go on to Kiwi dollar again. So what you are going to do is, or euro dollar, whatever, you are going to go back towards a random time in TradingView, right? I don't know whatever price action app happened here. So you go back, you don't know what has happened. You remove the drawings, again, nothing. So now you are going to go and you are going to just click, let me remove the events. Okay, and now you are just going to be seeing, okay, where is the market right now? What you're going to go through this questions that we just ask ourselves, which are where are we? What are we targeting next? And then you are going to go through the daily chart like that. So let's see, this is the next target. We have equal lows. This is where I expect the market to go. And where we are very, very bearish. So now let's see. Okay, we move bullish, still expecting the market to target that low. So now that we've set that high, okay, and okay, we target the low. Now, do we continue bearish? Well, yes. So what is the next target? Well, my next target right now is going to be probably a fair value gap down here. So my next target, the big magnet, is going to be this fair value gap right here. Completely understanding that there is the possibility that now we reverse because we just swept a big low. So at this time, I am not trading. And so let's see. Okay, now we have a big move to the upside. We sweep this high. Where are we? We are still very bearish. We flip this fair value gap. So I'm still either not trading or waiting for bearish confirmation. And so, okay, this now tells me that the next target is going to be this low. So, and for example, for this specific day, 21st of February of 2022, my target would actually be this low and not like my short-term target would be that low. And so we have, boom, that was reached, and then boom, we go towards that low. And that you saw that I went, I don't know what is going on. And this is basically the daily bias exercise. You do this for a couple of years and you'll see that the daily bias is going to become so much more clear to you. And again, I'm still bearish. Next target was reached, still bearish. Okay, now we might start seeing some movement to the upside, but the market is showing more bearishness. So let's see what the next target is besides this low. What can we have? We can have these lows right here. Okay, let's see if that is the case. Market is ranging, sweeps the high, taps this order block right here, and then starts moving to the downside. And notice how all of this range, the market is moving short term up. You don't execute on this range. You don't need to execute. And we'll go back to the presentation very, very soon. But notice how the targets just keep on getting reached. By what? By not trying to call this inversion, this, I don't know, this 300 pip inversion. You don't need to call this because the overall move to the downside was an extra 650 pips. You know how crazy that is. Now, some word of advice that is very, very important. You don't need to know the direction every single day. And when you don't, or when your direction is wrong, you minimize your losses in trading when the direction is wrong. How? If you're confused, you don't trade. And then you maximize your wins when the direction is right. How? By when you have clear targets, clean reaction of a higher time frame PD array, you are cautiously more aggressive. And that's where you saw me, for example, right here, calling that I would target this low, right? And as the market moves lower, once it taps the higher time frame PD array and it goes bearish, what did I say? Okay, now I expect the market to go towards the low. So this is where you would be more aggressive bearish. But it's all about understanding the daily bias and understanding that you should be trying to go with the trend and not against the trend. Always ask yourself, where are we right now and what are we targeting next? Don't be these 91% of traders that are trying to call the low on, let me show you right now, on an extremely bearish market. This is where traders are trying to call the low. This is where only 9% of traders are now positioned short. 9% of traders are currently positioned short. Do you know how stupid this is? The market is bearish. Why are traders still trying to long? It's because they don't understand the concept of the daily bias. They're still trying to save themselves by going to the tiny rock that they saw, not understanding that there is a log that they can hold on to and become profitable. So that is the daily bias for you. I do recommend you doing a lot of years of the daily bias exercise. And if you want all this for free, then you can check the free course. All the resources are going to be there. So I hope you enjoyed, and I'll see you tomorrow. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.